What's up everybody, Tom here with another video. In today's video, you know what time it is. It's time for us to do our recap of last week and a look ahead at the markets for the week ahead. We'll be covering in this video the SP 500, Nasdaq, Tesla, gold, AMC, and everything else. Boy oh boy, was it a massive week last week. We saw squeezes get out of control, some retail get very, very rich, some still in. And of course, then we had the jobs numbers, and the jobs numbers led to a massive rise in the stock markets after a bit of a lackluster result. Why did all of this happen? Let's take a look at it now together. Stay tuned. Okay, well, as we like to do on this channel, everybody, let's have a look at the heat map for last week, especially the Friday close session. And you'll notice straight away, it was a sea of green in the technology sectors, communication sectors, and those areas. Why was this? Well, it was, of course, because of the US jobs numbers, and we'll talk about that a little bit more in a second. In terms of the indices, Nasdaq out in the lead, SP 500 being brought along for the ride by the Nasdaq stocks going so well. And then of course we had the Dow Jones and IWM Russell right behind it. When we go over and have a look at the actual sectors, there's a surprising one in here, and I'm very happy it's out, and that's IBB. Of course, you know, on this channel, I'm starting to very heavily look at the biotech sector, and it's great to see that starting to move. We also had communications, another sector that's been a little bit misrepresented over the last 2-3 months, and then XLK out in the lead. Usually you get XLK, XLY, they usually run together, but IBB and XLC coming through, pretty nice stuff. Now, just a quick reminder to everybody that's trading in the markets this week, there still is earnings and there still are a few large companies coming out. Obviously, it's slowed down a lot from where it was. We've got GameStop, we've got Chewy, and we've got a few others coming out through the week. You can always get this report from Earnings Whispers. We're not sponsored by it. I just think it's a really great website that's free that you can get these earnings calendars from. Now, just to talk about discussion points, of course, Elon Musk is again making waves in the markets. And why? Because he's tweeting about crypto, he's tweeting about his breakup with Bitcoin, then he's tweeting about meme cryptos and pushing them through. Since then, he's taken away, he basically made it his icon, he's taken it away. But I just wanted to quickly say that until Elon Musk doesn't have as a bigger effect on the crypto markets, it's unlikely the crypto markets can properly recover. Basically, ever since Elon's come in here into the crypto markets, he's created a huge amount of pump and a huge amount of dump. And obviously, every time he goes and creates a meme coin, it does damage to some of the other bigger coins like Bitcoin, Ethereum, etc. So hopefully, this stuff gets under control. And I'm sure a lot of people in the industry feel like that. How do you feel about the situation? Put your comments down below on how you're feeling about all of this right now if you're a crypto fan. We will be taking a look at Bitcoin a little bit later. So non-farm payrolls, the jobs numbers, these were all important, and it was a case of let's rewind the track, guys, back to 2014, 15, 16, the period where everyone was afraid that they would take away the stimulus in the markets. And guess what? Non-farm payrolls results. Okay, but under expectations. So what happened last week? We had a fake news figure, which was, of course, the first figure that comes out usually the day before, and that looked pretty promising. Then the non-farms came out. That looked a little bit lackluster. It didn't hit the expectations. Now, where were all the jobs? Of course, they were in the main areas you expect: education and health services, leisure and hospitality as the economy reopens. But this is a classic case of please don't take away the stimulus from the market. Please don't take it away, Mr. Fed and everybody else. We need this money, and we are happy when we slightly go below expectations. So remember, this is what we're looking for now on. We're looking for numbers that don't beat expectations. We want slightly underneath almost every single time, and that will be a positive towards market. Bad news is the new good news, guys. Let's have a look at the US 10-year treasuries. You can see here on the daily, they dropped off heavily, which means, of course, inflation concerns didn't really come around. And as we expect, look, I still think this number is going to go up to 1.95. Don't get me wrong. I still think it's going to go up. But for now, inflation seems to be not the discussion point. And remember, last weekend, everyone was like, oh, inflation, inflation, inflation. It's why you've got to get rid of the rhetoric that you're reading online, and you've got to have a look at the price action and look at the cold, hard facts. Because at this stage, 1.55 for the 10-year treasury yield, and you can see the support here about 1.5, 1.53. If it breaks under that, it could come down quite substantially and lead to even bigger gains in the market over the week. So we'll continue to watch this for sure, the US 10-year. Let's have a look at the dollar index. Lots of fake outs on the dollar index. Unfortunately, this is what happens in non-farm payrolls. Everything was looking really bullish for the dollar index, and then it reverses because of the big news. But I want to just quickly show you the weekly and why we do a top-down approach here on the channel. So firstly, we know this level is clearly important. We never had a closure break underneath this zone, this 89 kind of 90 zone. Then you have a look at all of these weekly candles recently. What are they? They're long leg doji. What is long leg doji? Indecision candles. So effectively, we have absolutely no decision being made either way, and the dollar index is completely lost. Now, did it stop where we thought it would as a community? I think it did. So basically, it broke through. It broke through all these rejection candles, and then it had to come down probably after the non-farms. It almost always was going to. This week will be important because it's in between this zone here and this previous resistance across here in the 90-20. So as long as it stays above 90, it's got a good chance of actually rebounding and moving higher. Now, if it gets underneath that long leg doji on the weekly, decision will be made, and then we can see some proper moves here on the dollar index, which we haven't seen for some time. When we're talking about who this is good for, obviously a weakening US dollar is excellent news for people like gold traders and silver traders. And we saw huge rebounds. We talked about this trend line. We've obviously talked to death about the level that it's at right now, which means that we've done a very good job of finding a key support and resistance zone. And it bounced straight off this very quickly. And when we go down to like a 4 hour, you'll see the big rejection here. And it's actually decently hard to trade. Like if you were looking at this and you were thinking, oh, how do I trade it? I mean, you could have certainly said, okay, I like the bounce off. I like the fact that we're breaking through this resistance. And a lot of people would have taken closures here for day trades up until this level, which it hit, the 1890 level, 1888 level. Why did it hit this zone? Because we know this is an incredibly key resistance and support zone. And if I was trading gold this week, I would be laser focused in on this level. I would be watching how this now sits around this zone, how it interacts with it, and whether it creates a bit of a coiling range or spring range where effectively if it breaks under the structure, we retest the trend line. If it breaks above the structure, we're going to retest the highs and hopefully go towards that 1930 zone. So this is a super important level for gold, and silver is going to come along for the ride as well, depending on what it likes to do. So watch these two levels, watch closures above or below, and watch how it now consolidates through that zone. It's going to be super interesting stuff. Silver came through the trend line as well, rebounded heavily. And in fact, silver did a little bit better than gold when you think about how much it made up. Silver should have really just gotten to around this 2770 zone, but it actually got all the way back up to 28 on the close. And that's pretty significant. If we go and have a look at a weekly chart here, what you'll notice is that it really is trying to move up in this squeeze concept. And I've been relatively bullish here on silver for quite a long time. My aim is obviously 30, but I want to see a closure above 30 to really indicate a monstrous squeeze here on silver. And we're continuing to see it kind of make higher lows and higher highs. But is it enough? At this stage, we have to wait for gold to break through. The dollar index has to weaken, etc., etc., etc. Top stuff here, though, on the silver trades. US oil, the gift that keeps on giving. Black gold is doing really, really well for traders out there. We've been watching this one for a while now. We've been watching this breakout that happened over here when it got above the 66.50. That was a phenomenal effort, and ever since then, it's been very, very bullish. I'm watching it on the 2 hour as the best level, I think, and the 50 exponential moving average, this blue one here, is my ultimate kind of like pullback area. And then, of course, the red one, the 20, is the level that most people are kind of picking up as this moves towards and chugs towards 72. Articles already coming out right now about $100 oil possible, blah, 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 which means that when we hit these zones, we are probably going to see a reversal. We're going to see some OPEC funny business. Something like that will most likely happen around this 72 to 75. And you can see on the weekly why we're targeting this zone so much. AMC traders, guys, you were wild last week. You pushed it all the way up, $70, all the way back down, all the way up again. There were 100% days within the sessions. Mad stuff going on here. I'll tell you, though, it's very worrying what happened through the sessions. Number one, we have, of course, more shares being issued. Number two, you've got every single one of these brokers being like, oh, we think that you're going to lose all your money and everything like that. And that could be true. People are going to lose a lot of money if this all breaks down. However, it's interesting to see this coming out again. Will they start limiting people and how much they can actually buy into it like they did last time for GME and AMC? And that ended the really big crushing blow that was happening to the markets. The other thing that I've got a bit of a worry about is when you take a look at this chart and you start to break it down, it's kind of doing that classic blow off. Remember, what happens when market goes wild, it goes euphoric, then it drops usually a huge percentage, over 30%. In this case, it's gone 48, and then it recoups a huge amount of that. And it's actually kind of hit the peak again. And many people are saying, oh, was this a double top or something like that? I feel like this week you're going to have to watch very, very carefully this. I do think Monday might be an okay open for it because people would have sold into the Friday close like they did the week before, a little bit scared to hold the position over the weekend, rightfully so. And then the Monday session might be green, but the next session, the Tuesday session, is probably going to be the teller. And I know that most people, they haven't liquidated that many positions. Obviously, there's a lot of holding going on here. We've got this $7 resistance that became support. We've got the all-time high that got broken out. And you can see this line coming through this area as well. So somewhere around here is where AMC's got to put up one of its final stands. And hopefully it can do so for you guys. Otherwise, if it continues to drive underneath that price, I mean, it might just kind of weaken back into the 25s, 20s, and this initial short squeeze may be over. Keep watching it, and good luck out there. Tesla, $600. This is an interesting one. Testing from the bottom up. So last week, very disappointing for Tesla. We broke above 600. We moved ahead over a week. Then we came back down. This zone should always have been hopefully better buying pressure. It wasn't. It failed. And with all of this stuff going on with Elon Musk and the Twitters and everything like that, I feel like a lot of people are losing faith in the fact that he's really putting in huge amounts of work at Tesla. Some of you obviously are not, but I think the market overall is not happy with it. And that's partially why this is down here. Obviously increased competition and everything else. Here's the $600. You can see across the board how important this zone is going to be for it to break through. But on the Monday session, it's right at resistance. So effectively, there's going to be sellers right around here. Now, do they create lightning bolts and sell it back down to 560? For longer term position holders, under 560 will expose 500 and 450. I pretty firmly believe that. And of course, getting back above 600 puts us back in the firing line of the devil number 666. So we'll have to watch this throughout the session. Stay tuned to the channel for that. Let's have a look at the US 100, the Nasdaq. My goodness, this thing was a powerhouse throughout the session. It slammed through 13,610, and we actually saw the exact same thing as last non-farms. Let me see if I can show you guys. This will not show it. Let me just go down to a 15-minute. There we go. So what actually happened in non-farm payrolls is the number comes out, and often it goes in a direction. It then always, or usually, comes back down and fakes out a lot of people's initial scalps. So actually what happened here, if we broke it down, is the first couple or little bit of minutes, it actually ran up. Then we saw it live, so you can go check out the live on the Friday stream. Then it sold off immediately. Then it came straight back up, and I said, this is going to go straight back up, just like the last month, because that's exactly what happened when we were watching it last month. It came up, hit the resistance, and then of course, as soon as it cleared that level, the rest was history, back up to our next zone, which is around that 13,750. Now, this is an amazing closure for the Nasdaq. We've been talking about this zone for so long, 13,750. We have now closed above that on the weekly, and I think this bodes pretty well for bullish behavior back into the 14,000. Everything was looking a little bit shaky on the Thursday session. The non-farms came out. We're always going to wait for it because we need to know the number. And now that we've seen slightly less, we've seen the inflation concerns go away, and we've seen it's all good. Stimulus is going to be here to stay. The market seems to be ready to make its next move. So Nasdaq above 13,750. Hopefully now it can drive through the Monday session to 14,000, or through the week to 14,000 and continue to move up. This is a big deal, and you can check it out on things like the daily. See that close? Very significant close above all the other levels. This is good stuff for the bulls in the market. US 500, similar kind of thing. Big bullish move here after the non-farm payrolls. You can see the 42.20 got absolutely smashed. It's gone back up to resistance, and we'll look at the real market to get a bit of an expectation here. So we've had great rejections. We didn't quite get down to the 20 moving average during the pullback through, of course, May, which is what we kind of had hoped it to do, but the Nasdaq gave us plenty of pullback action. And now we move towards the community trend line, the trend line area that we have been watching now for months and months and months, and trading incredibly well off this level, may I say. So good work, community, for this one. So we go and we continue up, and hopefully we can move towards the next areas. So when we go and have a breakdown here on the candles, you'll notice daily big rejection off the 4180 key zone. We knew this. We did this together in the community. And then we've got a nice closure above all these other bodies right at the resistance. So this week will be pretty pivotal. Usually when you crack a new high, you usually do so in style. So if we are going to break a new high, it usually does a very nice little move there, hopefully like a 1.5% kind of day. And then we can grind higher towards the 4350, 4400. What do you guys think in the comments down below? Do you think the market's going to hit a 44, 45 before the next pullback? It's starting to look that way based on those job numbers and everything else. Let's just quickly finish up here on Bitcoin and talk about what's going on in the Bitcoin markets. Very difficult trades, guys. I've said it before and I'll say it again. At the moment, the technicals aren't working as well as they were in the Bitcoin market because, of course, people like Elon and other people creating FUD and all sorts of things out there. It's really doing a big, big mess up on the way that the markets are trading. Now, I love technicals on Bitcoin, Ethereum generally, and ADA and others. I think they work very well. But right now, the only ones I'm looking at is this support, which is the body closures here on the daily. And I'm also very keen to see where the weekly closes, because when you bring up the weekly chart, this just puts even more pressure on the markets. Now, imagine if this weekly chart closes down here and goes red. We've got a rejection candle, and we're starting to think about that Wyckoff theory, where basically the market could make a new low, come down to one of these, take out a lot of stop losses, and then hopefully reverse back up. But no matter what, if these two weeklies close this way, the importance of the 42,000 break in the future is going to be phenomenal, because what are we going to be doing? We're going to be closing above two massive rejection candles, which is showing us that the bulls are back in town, baby. And if that does happen, then we can start to really put dents in the bull side. So it's an important week here for Bitcoin. Let's see how it holds around this 34,000, 35,000 zone. Let's see if any more fear comes into the market. And if it does and we make a new low, I'm not necessarily concerned about the new low for the overall bull trend. But at this point, I am definitely sitting back, investing at key zones, and not necessarily trading it as much as you usually would. Thanks, everybody. I hope you have a great week, a great weekend, and we'll see you live Monday, 1.5 hours early before the New York Open. It's going to be an absolute banger. It's going to be a great week, guys. I can feel it right now, and I hope each and every one of you make as much money as possible, but of course, only when safe to do so. Subscribe, guys. Like the video if you did, and we'll see you in the next one. Bye for now.